Hi everyone, welcome to the webinar. Yeah, we'll just give a few moments before everyone joins and then we start off. I'm just hoping that everyone is able to hear me and see me. You can use the chat option to communicate with us. So typically we see that it takes a few minutes before people join in. So let's just give a few more moments. Yes, I've got a confirmation that the audience is able to see us, hear us, which is good. Great. I think in the interest of time, we should start off. Hi all, welcome to the webinar. I am Niranjan Anand. I lead marketing at Profinch Solutions. On behalf of Profinch Solutions, I welcome you all for today's webinar on accelerate your lending business growth, drive more customer value and innovation. Now, before we get into the webinar, a bit about Profinch, because I'm not sure as to how many of you are aware of Profinch. We are a technology company focused on the banking and financial services and insurance space, and we currently work with over 120 financial institutions in over 50 countries. In the GCC space alone, we work with over 20 financial institutions. We have offices in multiple locations, including one in Dubai. All right. Now, for today's webinar, we all understand how the lending landscape is changing across regions, with technology really coming to the fore in transforming the lending process, both from a customer and lender standpoint. And we'll be discussing more of it in today's webinar. Now, before I pass it on to the speakers, I would like to have Abhishek Kulkarni, our GCC Business Development Head, who's been working extensively with financial institutions across the region and helping them achieve their business objectives. So he would be speaking a bit about the lending landscape and the challenges. Yeah, so over to you, Abhishek, if you can take over.
Thank you so much. Thank you so much, Niranjan. Good afternoon to all and a very warm welcome to everybody present here. My name is Abhishek and I represent Profinch Solutions in Middle Eastern market. So thank you so much for joining this webinar. This session is particularly focused on giving a digital boost to financing companies to help them accelerate their lending business. Now, this business growth will be achieved by driving more customer value through innovation, definitely. So we at Profinch, we bring in this unique bundle of innovation and digitalization through cutting-edge technology and domain experience. So in today's session, we will mostly talk about the financial market dynamics in Middle East market particularly, followed by a very special keynote from our guest speaker on Saudi Arabian lending business, and then followed by a key value propositions to automate this entire digital lending journey. So when we talk about the Middle Eastern market particularly, we tend to focus on larger countries who capture the largest market share in terms of lending business. And Saudi Arabia has always been a leader in Islamic financing market and is growing exponentially by bringing in new digital lending companies and expanding the reach to all the corners. A few other countries like Egypt, UAE, Jordan, they are also following the similar footsteps and trying to achieve the greater heights in this space. Now, when speaking to different financing companies in the region, we have observed, there are a few challenges faced either by financial institutions or their end customers. Now, so to name few, customers, they basically lack their credit availability, information about the credit availability, credit processes, the assessment and disbursement, and then many other areas. So these are more on the customer side. But while the financial institutions, they must invest heavily on customer acquisition, they still face disconnect with internal systems, having no proper credit assessment tools, and many other challenges. So thus we as Profinch, we believed to not only highlight these challenges, but also to provide a unique solution to these problem statements. Now, we will be discussing all these things in detail in the next 1 hour. It is now time for me to introduce our guest speaker, Mr. Saleh Al-Ghamdi, to take the center stage and talk about the Saudi Arabian market in detail. To introduce Mr. Saleh, he is a marketing graduate and has been working in fintech industry extensively. His experience portfolio is focused on business development, growth, and product management. He's currently working with Emkan Finance in Saudi Arabia and is focusing on product initiatives, new partnerships, and financing for purchases. With this brief introduction, I now request Saleh to take over for the next 10 minutes and share his thoughts on today's topic. Over to you, Saleh.
Thank you, Abhishek. Thank you. You can hear me well, right?
Yes.
All right. First of all, welcome everyone, and I hope you're doing well. A good number of people is showing up, and that's good. A lot of people are interested in finance. I want to start this talk by going fairly quickly on how the finance companies used to operate before and why Saudi Arabia is different from other countries in terms of flow and use cases, due to Islamic finance requirements and the regulators' requirements, of course. At the beginning of the 2000s, a lot of the banks were not implementing Sharia compliance, and the ones that were following Sharia compliance were using cars instead of cash. Then the consumer would go and sell the car to get the cash. Even 10 years later, companies have been using manual work heavily. Online applications were just basic lead generation forms that were used to gather leads for the sales teams. The credit teams were also reading the SIM reports manually and approving it manually. The contracts were loaded manually. When the customer signs them, the contracts were sent to the ops teams for review. Then the approval on the contract would come in afterwards. There was technology used, Abhishek, but it was used to move scanned papers. All the decisions were made by the team, and the touch points of the processes and controls were done. And of course, this is not good for growth. You need to automate. So when the finance businesses started considering the digital transformation, there were two main domains the companies had to work on: the internal transformation and the customer-facing transformation, which is the online applications or website. So this is, of course, paramount to the growth of lending businesses. The internal transformation was a big hassle because in regulated environment, you still have to get approval for any kind of new system you're using. You have to have memos signed by committees and approved in a certain process. The departments involved are many departments internally. So you have to involve the risk, the operations and the credit, the sales department, the collection and recovery, the customer care. All of them, they had to participate to be part of this transformation. And each one had to chip in with their team, with their manual, with their focus. And this is an important thing. Then comes the second part where the companies had to seriously build an LMS and an LOS. These systems require many requirements. I'm mentioning this to share with everyone that this is a huge scope. When you want to innovate in a financing company, you have to get Sharia compliance requirements in place. You have to get the commodity purchase flow, the contracts generation flow, the files and documents custody. You have to have the middleware integrations for AML and KYC, compliance and risk teams, dashboards and reports, disbursement operations, approval flows, finance teams, reports and early settlements. Now it's important to differentiate keeping a copy digitally of any paperwork and making the entire flow not require printed papers and manual approvals with the automation of the process. These two things are totally different, Abhishek. Now, when the leader of a financing company is aspiring to innovate and implement a better system and digitally transform the company, he or she will face some of the following challenges. Local hosting is important, required by the regulator. The regulatory approvals are required for any new systems. The risk assessments and cybersecurity framework is also important. All of these have to be taken in consideration when planning moving to a new system, which makes the innovation a bit challenging in financing companies. In terms of consumer-facing digital flows, it's important to note the following. Number one, recently the regulator has published the requirements of the digital applications, specifically if the customer is going to sign the contract and the promissory note online. Number two, the new APIs provided by the government agencies have prepared for a strong digital transformation when it comes to identity verification and information. Getting the customer's information from Ministry of Interior is now powered by the APIs. Phone ownership API. We have seen some fraud cases in KSA for the OTP. So SAMA has interfered and shared the circular with everyone, asking them to add the purpose of each SMS and authenticate the ownership of the phone number compared to the same application ID. AML and sanction screening, using some services to make sure that none of the customers are on the international wanted list. Credit Bureau API, integrating with the Credit Bureau is a standard business requirement now for financing companies to make sure that there are no DBR breaches and the customer's risk profile is fit for the company's criteria and product. E-signature. Now e-signatures in KSA are legitimate and considered official in the court of law. So there are service providers for e-signature. Digital promissory note, thanks to the Ministry of Justice, now users can sign the promissory notes online, verifying their identity before they do so. And this is also taking in court. Now it's important to talk about the intuitive part of the system that can save a lot of time. Configuration-based solution. This is number one. The solution should be easy for functional team players to configure, adjust the flow, and add more dashboards. Smart screens and one-click actions. This is for an easy and clear user experience. Approval flow designs. The team of the finance company should be able to always build and improve the internal processes. And of course, the smart login features to maintain security and quick access for the team, considering two-factor authentication and cybersecurity framework, of course. Innovation in business models and using technology to overcome old problems. We have to talk about this. We can mention two important businesses that benefited heavily from technology in acquiring more users and automating the flow. First of all is the buy now, pay later and the personal finance. For example, Tamara and Emkan. Tamara is doing great in the buy now, pay later. Emkan is doing great in the PF, personal finance. Very successful examples in tackling these problems. Two parts, automating the KYC and credit decision engine flow. This is the first part. This is a big challenge for any financing company because they still have to adhere to regulations of the KYC and help the credit team in making the credit decision faster. The second part is automating the disbursement and the refund. In the case of purchases financing or buy now, pay later, the customers are eager to get the process done in no time. That's why these companies have been successful in automating the flow of loan financing or cancellation. Refund also is important, and making it easy to track the request from the customer's point of view. So as a user, I know if my request is cancelled or not, if I'm gonna get the refund or not, and what is my due for the next payment. Crowdfunding companies, Lendo and Raqamiyya are amazing examples when it comes to SME financing. By crowdfunding, we mean SMEs getting funding from individuals through platforms that manage the credit underwriting, the amounts collection, and the repayment to the investors who are the individuals that did this financing. These platforms have helped SMEs immensely in getting access to new sources of financing. The reason they are successful is that they were able to build a process and a digital flow where the entire customer-facing experience seems intuitive and easy to use. They are truly a success story, and I'm a user myself. Of course, we have to mention the big changes that are coming with the SAMA regulations. In the coming 6 months, the open banking APIs are going to enable all finance players to know their customers on a deeper level, like customer spending, customer behavior, customers' income or salary, current loans, and so on. Then in the next phase of the open banking KSA, finance companies will be able to collect the monthly payments directly from the customer's bank account with the consent of the user. This will also boost the role of all financing brokers. This is a big thing. Examples for players in this field is Lean Technologies, LeanTech.me, and Plaid and TrueLayer. Successful ecosystem. I want to also quickly run by some successful ecosystems or players in this field. Rajhi application marketplace. When it comes to digitization and helping the customers throughout the whole journey, I think ARB has done a great job through their consumer-facing app. The entire cycle can be done and updating the customer on the front end. Tamam Finance Company was a successful case as well, having the entire application done online. Tasheel is a great case because Tasheel has done the digital part and the growth part in the right way. With their product, with extra retail company, they are proactive and doing amazing things. Tamara is also doing great when it comes to growth and when it comes to hacking the flow of KYC. Allow me to wrap up, guys. At the end of this presentation, I want to share with you two things. We still believe that digital transformation and growth in lending businesses is hard. That's why it's important to plan the deliverables on future milestones based on your budget and team's capacity. Two, as a regulated entity, you still have to go back to the regulator to get approvals for new vendors and the new innovative products. Wishing you all the best with your growth and businesses. Thank you so much for your time. Now back to you, Abhishek.
Thank you so much. Thank you so much, Saleh, for all these inputs. And we are very sure that how the Saudi Arabian lending market is moving further. We are going to catch up to that, bringing in new innovations and new technological solutions to cater to these requirements. Now it is time for us to introduce our next speaker for this session, Mr. Sriram Ganeshan, who will cover our key solution aspects. To introduce Sriram, he is a certified PMP and CAIIB professional, having more than 16 years of experience in banking and financial services domain. His experience has spanned across into operations, core banking transformation journeys, into business analysis and project management. He has worked with some of the rich clientele in the region, for example, Reserve Bank of India, Citibank, Barclays, HSBC, and many more. He's currently part of Profinch technology team and is involved in solutioning and solving real-life problems for banks and financial institutions. He's an avid follower of fintech happenings around the world and is specially inclined towards the lending domain, covering the retail and corporate side. I now request Sriram to take the journey forward from Saleh for the next 30 minutes. Over to you, Sriram.
Thank you, Abhishek, and thank you, Mr. Saleh. It was a great intro on how the industry is there and where should we move ahead, or how should we move ahead in terms of the digital lending space. With that note in mind, let us understand the key aspects of how the industry is moving. Right, one of the verified market research institutions, they conducted a survey. They found that the digital lending platform market as of 2020 was $7.14 billion US. Cut to 2028, they believe that the market will be around, the digital lending market will be around 27.7 billion, which roughly translates around 18% year-on-year annual growth, right? But I strongly feel that this number is very conservative. Why? Because the technology advancements that is coming in and the world that we are living in, let's say the 5G that is getting rolled out in many countries across the world, with that coming into action, by 2028 or 2030, more than 50% of your lending across the world will be as part of the digital lending. Gone are those days where people were traveling to a branch, meeting the representative, waiting for a decision, and then traveling back to the branch and then doing a lot of paperwork, right? Now, with the advent of digital lending, now the whole lending process completes in hours or even in minutes, right? There are advertisements that we see in the internet where lenders say that they issue a loan or they approve a loan in less than 3 minutes of time. How is this all possible? This is all possible because of the technological advancements and the solutioning in terms of a digital end-to-end digital solution that has made that has enabled lenders across the world to give out loans less than 3 minutes. This is not only in case of your retail lending, but even for your SME lending or your corporate lending, the loan processing time has drastically come down. So how to get to that? So the important point is, how can I get to that? As a financial institution, how can I get to that stage? This is what we are going to cover in next few minutes. The need of hour is first a complete end-to-end loan management solution. Right from your loan origination process, where you give the power to the customer, where they can create the loan, where they can apply for a loan through their mobile phones, the entire loan underwriting and the documentation steps, and the loan servicing and the management, along with the analytics. We should have a solution, any financial institution who concentrates on these aspects. One is the customer layer, one is the loan processing, the customer experience, the loan processing experience, and also the loan management experience, along with the insights, actionable insights based on the analytics. So they will be very successful going forward. And along with this, the power of data, the ability to utilize the data and arrive at actionable insights with the help of this data. Very importantly, to arrive at the single source of truth. So there might be customer information which will be available in different systems. Get all the customer information into a single system and then make it as a single source of truth. So any information about your customer, you have it at the fingertips. This having the data, single source of data, enables any financial institution to do descriptive and prescriptive analytics. Descriptive analytics, as in case of where whenever there is a loan that is issued, past trends on the loan, let's say last 6 months, what has happened to the loan, what are the loans issued, and how is the loan performed over the quarters, I would want to see. That comes under descriptive analytics. Now going to the case of prescriptive analytics, how can I predict if there will be a loan default? So that is very important, right? So I can always do a loan, I can also do an analysis of a loan and existing loan, but how to predict if a loan that I'm offering today will be a default one? So how can I plan for that, right? There are technologies that are available today with the help of technologies like artificial intelligence and machine learning. There are a lot of algorithms like linear regression, logistic regression, and k nearest neighbor. These algorithms help a financial institution to predict if a particular loan will be in default. So we are the information is available with us, and we can take careful steps as we move ahead with the digital transformation journey. And the last very important part is ability to roll out creative loan products. The same loan product cannot be given for retail customer and also for a corporate customer. Even if we go further down, let's say there is an SME customer who is a mill owner, and there is a petrol bunk, right? There is a customer who is owning a petrol bunk. Can I offer different loans, different kinds of loan products for different customers and different market segments? That is important. So ability to quickly roll out different or creative loan products as per the Sharia law is very important today. So the solution that we are envisaging today is a solution which is complete, has this loan end-to-end loan management, ability to utilize the data and then have the analytics done, and then ability to roll out creative loan products. So where is the solution, or do we have any solution like this? Yes, the answer is Profinch has come up with a solution which covers all these aspects in mind. So speaking of the loan product support, from a product support, we support all the traditional loan products such as Murabaha, Mudaraba, or Musharaka, a joint venture or a partnership, or even an Istisna loan as well. So in terms of the Ijara products, the leasing products, we also cover the financial Ijara and the operational Ijara as well. So these are the main asks from an industry, like whether the product is able to cater to all these product requirements from an Islamic side. Very importantly, the product is Sharia compliant and it is also certified by AAOIFI. that is accounting and auditing organization for Islamic financial institutions. There are financial institutions who not only concentrate on the financing part, but also they take deposits as well. So from that perspective as well, we do support with the CASA, the Mudaraba deposits, and also the Wakala deposits. And very importantly, the profit management aspect of it, how the profit apportioning happens, how to create a profit pool, and how to equally or proportionately distribute the profit across the investors is key. So the product also covers the trade finance aspect of it and also the treasury aspects of it. So complete end-to-end Islamic financing is available from the products perspective. Now, how a digital loan application process looks like. So typically we want to understand, right, how does a typical digital loan application process looks like. So here the idea is to give the power in the hands of the customer. The customer with this control, or it has a control in his hands, where at the comfort of his house or his location, with the help of a mobile, maybe an Android app or an iOS app, he should be able to apply for a loan, where he gives all these basic details, he uploads the documents, and then he uploads the selfie photos as well, and then there is an ability to do a real-time KYC integration. In terms of real-time KYC integration, there is an ability to integrate with the national ID system, and also systems like as Mr. Saleh was saying, how we can integrate with systems like with the industries, commerce industry, where we can get the necessary information about the commercial registration details of a SME or a corporate customer. So be it for a retail customer where we can integrate with the national ID, or be it for the corporate customer where we can integrate with the commerce industry and get the necessary information as part of API. So what is the advantage of this? The advantage here is that we do the onboarding very quickly. So gone are those days where customer submits his photo, customer submits his document, then there is a proof verification, and then after 10 days we onboard a customer. Now onboarding happens under less than 2 minutes of time, right? So this is on the customer side of it. Now when we move to the application processing side of it, so there is the blacklist check, basically the dedupe check with multiple combinations like mobile number, national ID, and your and address details as well. And you can do checks, multiple checks like SDN checks or your blacklist checks. All these checks can be performed. You can do external credit bureau verification just in case of SIMA, right? The SIMA, where we can integrate with the credit bureau, get the credit scores in real time, and then do a proper financial analysis in terms of a SME customer, all their profit and loss statements, how we can analyze those and how to arrive at the ratios. Basically, system will be able to do all these activities automatically without any manual intervention. And then system will be able to, there are two ways of going about it in terms of the decision making. Either you can go with the automated decision making or and suggested decision making, where the system will recommend what is the credit decisioning recommendation by the system, and then a manual user can go and act upon it. So all these are available as part of the application processing, which is available end to end, right? So your customer aspect of it and the application process of it, and finally the loan gets booked in the loan management solution, and the loan disbursement starts automatically. And in terms of disbursement, the loan can be dispersed through multiple number of ways, right? Not only to the account that the customer maintains with the financial institution, or in the customer accounts, the customer maintains an account with any financial institution. You should be able to send it to them as part of the fund transfer, as well as an Sadad or as a Sari payment in the instant payment system you can initiate. So there are multiple ways of looking at it. So the end-to-end digital transformation will come in when you ensure that you have right components for the end-to-end transformation, right from your loan creation, loan application processing, to the loan management and the NPA management as well. Going ahead, so multiple loan processing capabilities are available here. So very importantly, as Mr. Saleh was saying, how can a financial institution create workflows, different workflows? Because without workflow, you cannot streamline your process. So once you have a workflow, you can ensure that it is SLA bound and you can approve the loans within this agreed SLA. And very importantly, when the SLA, for the SLA to be optimized or to be reached at an early stage, you should be able to create the workflows. You should be able to modify the workflows as per the business need. Let's say for a Murabaha loan, I have 4-step loan process, and for a Ijara, financial Ijara, I can have 2-step loan process. So there are multiple loan workflows that we can create, and most importantly, we can easily change the workflows as we need. And the solution also comprises of multi-level approval capability, which ensures that for a particular loan which involves a credit committee approval, where a loan might be for a 10 million Saudi Riyal or 10 million US dollars. So there is an ability to approve the loan as per the loan amount. There can be conditional rule engines that can be built in as per the loan amount and as per the requirements of the financial institution. And biggest problem a financial institution will have is, okay, I collect all these documents digitally, but where do I store them? So storing the documents is very important, because that also includes a regulational aspect as well. So 10 years down the line, if there is a regulatory check on this, we should be able to tell them, yes, these are the documents that have been received from the customer. So there should be a place where we can store it. There should be a repository of document storage. So we need to ensure that there is a document management system in place. So our solution comes pre-integrated with the Alfresco document management solution, and the solution also comes with the alerts and notification engine. When we speak of alerts and notifications, notification can be sent to the customer, can be sent to the user whenever for a financial institution. Let's say whenever a case is assigned to a credit officer, he should be able to get a notification in his mobile number or in his mobile app, where he can see the application, he can check his application, he can do the credit assessment, and then he can do the authorization of the loan. So all these processes can be automated, and this solution has the right components for this. Now let us look at in detail the 3 aspects of it: the customer experience, the application process, and the loan management aspect of it. So in a traditional loan application process, the customer experience, how difficult it is and how it can be addressed, right? You have the cluttered UX, where the UX is not clear. There is so much of data that needs to be input. There is inconsistent the experience across different channels. You may have a mobile app, you may have a website. There is different kind of experience that the customer will get. So these are the things that we need to concentrate. One financial institution needs to concentrate and move towards this. A digital platform which is omni-channel, which gives a seamless experience across the platform. Intuitive, which is very intuitive, where it helps the customer to fill the information with as much as help that we can provide. Be it involving a chatbot in terms of aiding the customer to fill the application. So very easy to use, not too much of details, right? Very importantly, customers these days are not interested in filling 5 pages of data. They are interested to get their national IDs, and then they say, take my national ID, do all the necessary validations, and then onboard me. So that's the ask today. So the solution that any financial institution thinks through for an end-to-end digital management from a customer angle is that they have to go towards it and personalize the application. So not all customers want the same kind of loan products offered to them. So understand their requirements and give a loan product or loan suggestions to them or loan recommendations to them, which is personalized basis their requirements. So the solution should be in that way, so that the customer feels that yes, the bank or financial institution is not selling me what they want, but they are giving me what I want. So the trajectory has changed from what the financial institution wants to sell, from what the customer wants to have, and how are we giving them that. Now, in terms of the loan application process and submission, a fully digital paperless solution where you have the eKYC aided with OCR. So this optical character recognition is very important, where we get the data from the customer, customer uploads a document, we are able to read through the document and populate the fields as required. So as we discussed, customers have started becoming very smart. They don't want to waste much of time in loan application process. They just want to give the data, and then you have to read all the information. You have to connect to the necessary systems and do the necessary onboarding in a very short span of time. So the customers are not interested to spend too much of time with the financial institution in terms of the onboarding process. So we have to ensure that the onboarding process is quick, right? And also, is there any way that where we can bundle the application? So customer, we want to have a deposit and also a loan product with us. So can we an application process for them? So instead of asking them to do this, is what we need to understand, right? So this is on the loan application side. Now in terms of the loan servicing, the loan dashboard is very important to the customer. Tell them what is the current situation of the loan, like where do they stand, how much time it will take for them to repay the loan. All this information or basic information that any financial institution should be able to provide. So the loan statements, ability to repay the loans through the application, through mobile phone. If I'm able to repay a loan today, nothing like that, right? So I don't want to go to the bank branch and say that, sir, I have so much of money, I want to repay my loan. So gone are those days. So customers want the loan repayment to be done at their end. And very importantly, they also want to understand, in case of Murabaha loan or a Istisna loan, there is multiple disbursement schedules there, and I want to understand what is the disbursement schedule and how my schedule changes, the loan EMI schedule, how it changes accordingly. So I want to learn all these things at my fingertips. So whenever we are giving a financial institution gives a solution to the customer, access to the customer, these information are bare minimum that they have to ensure with. Now comes the loan processing part, the loan underwriting process, which is the most critical process of the loan process. So if you see, the traditional process is not manual, time consuming, is disconnected. There is so much of manual intervention here, so manual decision making. So even the financial institutions now are thinking, can there be a solution who can tell me whether to apply, whether to approve this loan or not? So can there be some recommendation given to me? So that is very important. So any digital solution that embarks upon this loan underwriting process should ensure that the automated credit decisioning process, or at least a recommendation for the credit decisioning process, is very important. So how do we move from a traditional tool to an advanced solution where loan underwriting process is simple? So as we discussed, easily configurable workflows. So a financial institution today might want to have 5-stage workflow. Tomorrow, as per the regulatory requirement, they want to increase it to a 6-stage workflow. The solution should be capable of doing it. They should not be going to the vendor to do that. So our solution has kept this in mind and ensures that the workflows are configurable, and any screen or any field that you want to change in the workflow, or any information that you want to capture from the customer, you can easily do it without a need for the vendor team, right? And then the solution should be capable of doing this internal credit scoring. Internal credit scoring is an important aspect when compared to an external credit score. Of course, external credit bureau like SEMA will definitely give you the credit score of the customer. But how are we internally scoring the customer basis of multiple attributes like their financial positions, their personal position, considering different attributes? How are we able to arrive at the internal credit scoring? That is very important. And then, as we discussed, the automated credit decisioning process, very, very important these days that we are looking upon. So the solution should be able to give a recommendation, or at least in some cases where a particular, if it is a quick loan, if it's a quick consumer loan, where if a credit score is above 750, you want to authorize or automatically approve the loan, that should be available. That automatic credit decisioning should be available. In case of corporate or SME customer loans, the system should be able to at least give a recommendation that yes, a loan can be, this is the loan and this can be authorized, or there is a risk, inherent risk in this loan approval. So that should be enabled. And very importantly, the last point is the alerts and notification. So not only for their users, but not for your credit officers, but also for the end customers. Your end customer should get the notifications that the loan is approved. They should be able to get time to time notifications of where the loan is currently pending with. And if we do all these things, if we have a configurable workflows where which we aid with automation, definitely the loan processing time will come down, and this will ensure that the customer stickiness is there. So a lot of time what we see is like customer halfway through the application process goes out of the application. Why? Because of the whole experience that we create and the whole time that takes to approve the loan. So if we concentrate on two aspects, one is the customer experience and also on the loan application process, we will ensure that the loan processing time comes down drastically. Right? With that, we'll move to the loan underwriting features. So the loan quotation, as we discussed, automated or a hybrid flow, where you want to manually authorize certain stages. Some steps to be automated, some stages can be manual stages that can be given. A single stage loan or a multi-stage loan, these are all supported out of box from our solution. And multilingual support, be it an Arabic language or be it any other language, right? That's apart from English. So that is very important. That gives a comfort to the customer and also to the users. Their home language or their native language support is very important. And then the support for multiple currencies, and then dedicated access. Very importantly, the dashboard access for multiple users is different. For a relationship manager, your dashboard will look different, but for a credit officer, the dashboard will look different. So all these things have been kept in mind, and the solution has been provided accordingly. Now let us consider the loan management aspect of it. So traditionally, if you see, there was lack of product flexibility. When you speak of product flexibility, so how does this loan repayment happens? So what are the different kinds of repayment that can be provided to the customer, whether it's a balloon payment or whether it's a EMI based payment, or what kind of profit accrual that we need to have in the system, and then how the disbursement happen, and how the repayment happens. So all these aspects are very important, and the traditional system did not have this ability to do this. Now there is a tedious loan lifecycle management. The customer gives the documents, you approve it, and then you collect the dispersed documents, and then you disperse it, and then monthly collections are painful, right? Very, very painful. And the solution comes with the traditional solution comes with basic reporting capability and ineffective NPA management. Very, very important point in today's context, particularly when the risk is growing up across the world in terms of the pandemic. How effectively we manage our NPA so that our non-performing assets are kept to the minimum. So the answer to that is a solution which has a flexible product configuration, inbuilt automated accounting. So I don't want any accounting to be manually input. Of course, there is an ability to do the manual input, but most of the accounting should be event based for any contract initiation, for the disbursement, for the accrual, for the liquidation of loan or the repayment of loans. All these accounting entries should be automated, and the system should support both conventional and Islamic as well. Of course, Islamic is the main target, but there are financial institutions who also want to test the conventional lending aspect. So the solution supports both Islamic and conventional lending as well. And full stack NPA management, as we discussed, right from your status of loan chain, when the loan becomes from standard to substandard to doubtful to loss asset. So the tracking of the loan across different stages is very important. The last but not the least, the deep dive analytics. This analytics will tell definitely how are we progressing, right? As we have given out loans across 1 year and how the loans are performing. Very important tools this day, right? So I need to understand where do we stand in terms of the loan repayments, right? How many NPAs are there today? So these analytics are definitely going to help us a lot, right? So let us look at the loan management features. Some of the key features like, so deferment or moratorium options, particularly in terms of pandemic, where the customers needs to be given a moratorium or deferment options where they can repay the loans in a later schedule, or they can split their EMI schedule for this month into across multiple schedules. That should be available. And for fixed asset tracking for Ijara loans, particularly in case of financial Ijara, So the fixed asset tracking for the Ijara loans, that Ijara leasing contracts, that is available, and then the multi-fund subscription support for Islamic asset management, that is supported, and automatic contribution adjustment for your Musharaka loans. So right from initially, the lender will have a higher share, and as the borrower keeps on paying the money, keeps on paying, the joint venture partner keeps on paying the EMI. So the share of the end customer, the share of the borrower increases, right? So how do we automatically adjust it, and how to arrive at the profit, right? Upfront profit calculation, how to arrive at the profit once the business is done, and how to arrive at the profit sharing between the lender and borrower here. So all these aspects are covered in our solution. Now coming to the loan analytics part. So as we were discussing, the solution comes with inbuilt dashboards. There are a lot of dashboards available. I've just added some 2 or 3 samples of it. So here you can see that there is the dashboard which speaks about the gross overdue by a customer category, where you can see what is the income at risk, and what is the income at risk in terms of the number, in terms of the contribution for different kinds of business. All this is there, right? So, and the trend analysis across the years, across the quarter of a different same year, or across the months of a current year, right? So we can do different kinds of permutation combination in terms of the loan trend analysis, which will give you a clear picture and what direction are we going towards. And as we discussed, the predictive analytics is definitely going to help you in terms of the loan approval. So whether a loan will go into default. So that is important, right? So last, let us touch upon the cloud management capabilities. As Mr. Saleh was saying, the solution the solution is now getting into SaaS. Of course, we offer both on-premise and SaaS-based solution, which is pure entirely on cloud, and there are so many advantages to it, right? So starting from your low capex, where there is not much amount of investment for financial institution, easy to scale, high growth, and very importantly, the secure system. So no one wants to, I just want to put my data in cloud where there is no security. No, gone are those days. The cloud providers today are enabled with so much of security, and it is much better than your on-premise solution today. So there are so many advantages for a financial institution to go SaaS way, and we are already SaaS enabled. And just to touch upon 1 or 2 case studies, what we have done for Ali's Islamic Bank, Oman. So they want to do an end-to-end lending process, they want to digitize a lending product. We ensured that we supported them throughout the journey, and now their average onboarding time is less than 2 minutes, right? Imagine a case where they were onboarding customer in less than 1 day. So now from 1 day, it has moved to less than 2 minutes. We integrated with the Royal State Oman Police, and then we have done the eKYC onboarding as an automated process. Now we have also enabled this Lapo Microfinance Nigeria, where is one of the biggest microfinance institutions in Nigeria, where their business requirement was to give a digital banking access and then to digitize a loan origination process. We have given loan origination workflows to them, where they are able to authorize loans in short span of time. Very importantly, there the loan initiation process is enabled for the agents. So they have multiple agents across the country, close to 4,000 agents across the country. Across Lapo Microfinance uses our solution to initiate loans, where they can collect the documents of the loan, and then they can give it to the officers where they can approve the loan. And also they involved in the loan disbursement and also in the loan collection process as well. So our solution meets the end-to-end requirement right from the loan origination to the loan management aspect of it. Quickly touching upon the summary, right? What have we spoken so far? So as we discussed, the 3 key aspects of a successful digital journey for a financial institution in terms of lending is your customer layer, your application processing layer, and your back office layer. So all these 3 layers should be connected real time through an API, where these layers go hand in hand, help the financial institution in terms of onboarding a customer quick and giving a quick disbursement of loan. So from a customer layer, there is an omni-channel layer where they can initiate the loan, and then the eKYC is done. And in terms of the application processing, there is a multi-stage workflow which is enabled with eKYC and sanction checks, where we can do automated financial analysis with the help of the rule engine that is available, and then the credit scoring and the credit decisioning process. Ability to do the credit decisioning process is also available, and the loan back office part, where your product management, the GL, the NPA management, the collections, all these aspects are all covered in this. So this is what we call it as an end-to-end solution. Your customer layer, your application processing layer, and your back office. And the solution is also integrated with commercial registration sites like VATQ, your payment systems like SARI and Sadat, the national ID, the SIMA, the credit bureau, and also if there is a need to integrate with the SAMA, we are ready to integrate with the SAMA as well. So this solution gives an in entirety to help the financial institutions across the GCC region to ensure that their digital lending space, they move towards being a pioneer in the digital lending space rather than being a laggard, right? So moving from a laggard to a leader, being a leader in the digital lending space is very important, and we come with the solutions for this. And if there is any questions, we can take it up across. I would like to hand it over to Niranjan.
Thank you, Sriram. I think it was a very insightful session. Thanks, Saleh. I think a lot of points shared. I have a few questions, but we're really short on time. Let's see as to how many questions we'll be able to accommodate. One quick question: can you explain how credit assessment process differs between individual and SME customers? Yeah, Sriram, you want to take that up? Yeah,
sure, I can take this up. So for a retail customer, the process is quite simple, right? So you get some documents from him, you analyze his financial situation, you go to the SIMA or the credit bureau, get the credit score, and you authorize a loan. And if it is a collateral, if there's a collateral based loan, you ensure that your collateral is checked thoroughly. So, but for a SME customer, the contours change differently, right? So where the customer has the ability, where the financial institution should have the ability to do the financial analysis, basically your balance sheet, your income statement analysis, ability to arrive at the ratios, so different kinds of solvency ratios for the customer, and then ability to do the credit decisioning process, right? The system should be able to recommend whether we should give a loan to him, do the necessary analytics, and then will there be a default in the loan, and if no, what is the loan amount that can be approved for the customer, right? So this is what it is expected now as part of the SME loan decisioning process or SME credit decisioning process. So this is how it is different. Just to summarize, your retail lending is quite simple, assessment is quite simple, but your SME assessment is complex, and our solution should be able to do the necessary automation and decisioning help for the financial institutions.
Thanks, Sriram. There's another question. Does your solution cover equipment finance and other asset financing requirements?
Perfect.
Sriram, you take it? Yeah.
Got it. Yeah, thank you. So yes, our solution we cover the equipment financing as well, as we have seen the financial ijara and the operational ijara. But from a conventional lending space or conventional leasing space, if one wants to go for a solution, there is a separate solution called lending and leasing solution, which helps financial institutions across the world to do this equipment financing, the hire purchase, financial lease, operational lease, or any kind of asset financing or medical instruments leasing. All these are possible today. So there are multiple sub-products that are supported as part of this solution. Of course, we would want to have more detailed discussion on this for customers who are more interested in it.
Okay, there is another question. What are the new digital channels you're planning to introduce for the Middle Eastern market? Abhishek, would you want to take that up? Yeah.
Sure. Thanks. Okay, so from a digital channel perspective, right now everybody understands, digitalization journey. It's kind of a never-ending process. So there are always some new areas brought in, for better customer reach, better customer service, customer retention, and other areas. So we must open up some new avenues, for financing every now and then. As of today, as our solution, which has been highlighted by Sriram here, a kind of unified solution, it basically touch base or cover most of the digital touch points needed for any financing companies to attract the customers. But obviously, we also don't stop here. We also like to innovate. We also like to bring in new avenues, new channels, new touch points. So there are areas like buy now, pay later, or debt funding, P2P lending, etc. These are the areas where we are investing heavily in terms of the developing the solutions or bringing these factors or features into the solution as well. And these are definitely the upcoming ones which are there in the roadmap in near future.
Sure. I think we don't have much time, but we'll take one last question. What is the differentiating aspect of Profinch solution? Yeah. So that question, do you want to take up, Abhishek? Yeah.
Sure. Well, that's an interesting question and very important. You might find many vendors, many solution providers in the market, but one standout point for Profinch, there is no solution provider in the market right now who has got experience of catering to, I would say, 130 plus financial services customers. Now, the most important thing here is, this solution is built from the experience which we have gathered by servicing to these banking and financial services customers across the globe. So this solution covers most of the pain point observed within different customers, and it is not focused only on one or two pain points, which can be country specific. So it fits into different aspects and fits into different country regulations as well as requirements. So it's kind of a pre-integrated solution, I would say, also having SaaS functionalities, to showcase immediate development in terms of the technological advancements and also, saving up upfront capital savings. So I believe these are few of the differentiators which Profinch brings in, not only in terms of the technological experience, but also a domain experience in terms of building these solutions from scratch, making sure all the financial services companies are well addressed to their pain points with a unified solution. I hope it answers.
Sure. I think we'll have to end the session now. We're pretty much on time. So I think we've had a great session, a lot of areas covered again. I again thank Saleh for taking time out for today's session and being a part of it. Thank you everyone for taking time out to join the webinar. We really appreciate you joining us. We'll have the recording available soon to everyone, and some of you who weren't able to attend and who dropped us a note earlier, we'll make sure that the recording is available to everyone. If you wish to get in touch with us, you can always visit our website, which is profinch.com. So till we meet again, have a wonderful day ahead. Thank you. I'm closing the webinar now. Thank you for your time. Thank you, everyone.
Thank you so much, gentlemen.
Thank you
for joining in.